Let's get started. All right, so we are currently on Zoom with the Discord. We did not trade today, but a lot of people asked for this boot camp video, so we're kind of doing it hand in hand. Okay, we're kind of like back testing with the Discord. So we'll get started on this. And since we didn't trade today, honestly figured it's a great time to do this. So with that being said, we'll go ahead and just put out our lines. So when market opened, okay. And yeah, we can go ahead and get started. All right, so obviously this is going to be in hindsight, but that's how I like doing backtesting anyways. If you guys have seen the backtesting bootcamp video, that's kind of how I like to do it. I like to just do like spotting things and like how we could have traded. So we'll go ahead and do that. Obviously, weekly bullish, daily bullish. We recently came into this daily order cock, and then we see price rise from there. Okay, we finally got a break of structure to the upside on the 4 hour with this candlestick right here. Push past that, all right. And then on the 1 hour, we continued to be bullish all the way up. Okay, so pre-market, we were kind of perma bullish on every single time frame. We did have CPI today. Any draws on liquidity? Not really. Besides like this 15-minute high, but even then, not so much. What can we see? We have this imbalance right here where we see price honestly reacting off of right now. If we go on like a higher time frame, let's see if there's anything over here. Not much going on over here. So again, this is kind of why I like to avoid CPI days, because we get this is when news came out, right? We see price rip, and then we make this imbalance. We see price draw towards there. Right after market opens, we fall. Okay. I guess you could call this break of structure. Filling this order block, rallies into boom, this imbalance, and then we get a break of structure to the upside off of this candlestick. But this is something that you probably could have entered long off of, right? Because the 4 hour bullish, 1 hour bullish, daily bullish. But the reason why I don't like trading on CPI, because most of the time the move has already been made. See how this is just low volume and it's just not really moving. Yeah, this is just it's not moving. Or it is moving, but it's barely, right? Compared to, right, CPI comes out, makes a 27-point move versus like or even from our entry up to where we would be at now, 4-point move, or even from the imbalance up till here, 12-point move, right? Versus just that one CPI candle. This is usually the majority of the move. So that's why I don't really like trading on news, especially if it comes out pre-market, because odds are when market does come back and get open, like this probably would have been the trade that we saw today, but it wasn't within our bias. So this is like a perfect example of a time that we wouldn't want to trade, right? I saw a lot of comments also asking me, hey, like, can you go over trades that you wouldn't want to take? This is a perfect example of this. Why? Because our daily bias was bullish, the 4 hours bullish, the 1 hour is bullish, 15-minute at the time was bullish, okay? And then we break structure to the downside on the 5-minute. Yes, we come into this order block and then continue, but it was short-lived, right? It was a retrace for the hourly time frame. What other things can we use in confluence with this? Boom, equilibrium. It came within there. That's pretty much it. So that's how I would have traded the S&P. I probably wouldn't have traded at all, and if I did take a trade, it would have been a long off of this 5-minute break. We did have this 15-minute break of structure to the upside right over here. Showing continuation on the hourly. This is something that I always talk about. So like when you get a break of structure, let's say on like the 15-minute, let's say we get a break of structure to the downside on the 15-minute, but we're in an uptrend on the hourly. Odds are that break of structure is going to be a retrace for the hourly. See how retrace on the hourly 15-minute, break of structure. 5-minute, okay, very similar, right? If we get a break of structure on the 5-minute, usually a retrace. If they're contradictory, right? If the 15-minute is breaking structure to the downside and the hourly is bullish, it's probably going to be a retrace. If the 5 minutes breaking structure to the downside and the 15 minutes bullish, probably going to be a retrace. Not every single time, because there's liquidity sweeps and there's change of market structure and direction, but it's just something to take note of, right? So like on the S&P, we had a perfect example of this over here, right? We got a break of structure to the downside on the daily. And on the weekly, it was just a retrace. So that's always something to keep in mind. That's something I've learned. Same thing with like the hourly. You see break of structure to the downside on the hourly, odds are it'll probably be a retrace on the 4-hour. Okay, that's why higher time frames hold higher power within the market. Okay, so that's the S&P kind of aimbotted down. We'll go ahead and move right on over to GBP JPY now. Boom. 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 Okay. So Forex strat, kind of mark these out. Okay, but first let's go over daily bias. Okay, so this is a great example. Broke structure to the downside on the daily. We already seen this first first bearish candle on the weekly. We see the break of structure. Okay, boom. We're bearish. We're bearish daily bias, and we're retracing on the weekly. Okay, so this is something where like the weekly, our retracement tools are very beneficial, right? What do we have here? Fair value gap, where price can likely draw towards. We have equilibrium, which is right around that fair value gap, which price can draw towards. That's kind of like all I see there. But moving forward, right, we see the daily moving down. Let's go into the 4 hours, see what we see. Not much on the 4 hour, still bearish bias. If we head over to the 1 hour, not much. Again, still bearish bias. So every single thing is telling us bearish, including the weekly, because we're retracing down into those areas. So what could we have done today? Let's go ahead and mark out those levels. What was this? Asian session. Mark out the Asian session high. And then this is London session. London session high, and then we also have the sort of London session low right there. Not really. Okay, so we don't see this high get pushed into during London session. We do see the London session high get pushed up into during New York session. Barely hits it, whether or not, whether or not you consider this valid or not, that's up to you, but you do end up getting that break of structure to the downside. Okay, you can short purely off of that or wait for price to react off of the order block right off this candle. Okay, short position, stop above there. Where can you target previous draws? So we've like that as a draw. You'd have to go into a higher time frame to move over here to see what else you could do. You could do like the top of this thing as like an order block. That hasn't been hit yet. And then you could do like, boom, liquidity here. And you can also use just like the daily. You could use like this low right here as like the start of a new fair value gap, all that stuff. Okay, so that's how I probably would have traded GJ, right? Not much on this. We didn't really see any like liquidity sweeps besides like just taking out these 15-minute highs. So that's it on GJ. Let's move forward to the gold. Boom. 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 All right. So, what is this? So we have the Asian session high. We have the London session low. Okay, and then let's go ahead and look into gold. So gold, bearish on the weekly. Still technically bearish on the daily, although odds that we close above here on the daily time frame are pretty likely, right? Odds that we break structure on this in the next 3 hours are very likely. But again, something to keep in mind, we're bearish on the weekly. We're bearish until we can close all the way above this high up here. So we still have a ways to go on this. So like bearish on the daily, but like kind of not really anymore. 4 hour, we were bullish pre-market. If we look into the 1 hour, we were not necessarily bullish on this. This is probably a trade that I would have avoided just due to the fact that we have a bunch of countering things, right? So we're bearish on the weekly, but I mean, at the time of market open, we were bearish on the daily, but this huge candle is obviously showing previous price action or after market opened. But bearish on the daily, bullish on the 4 hour, and then bearish on the 1 hour. You know, you probably don't want to be trading under those conditions. So with that being said, I probably wouldn't have wanted to take a trade off this, but we do see our Forex strategy work pretty well here. We see these London lows get pushed into, and then we see, boom, the break of structure right here, which honestly probably isn't the best thing to trade because this was right during CPI. So you probably would have taken the trade there if there wasn't news, and then target Asian session highs, and then really anything else, like find a weekly retracement tool if you do think price is going to go up. And that's why I was saying this isn't a good trade to take, because we wouldn't have taken this anyways because there's too many conflicting biases. But yeah, that's how I probably would have traded gold today. Let's go over to GU now. All right. Here we have Asian session highs, Asian session lows. London did not really make any highs. This was kind of like, I guess you could consider this the London session high. But this is like, this is like a perfect, whoever traded trend lines made bread during London session on this. But yeah, there's not really a London session high. You could like consider this the London session low, but again, I wouldn't even want to consider that. This is again like a kind of a shitty price action. Oh wait, what happened? This is kind of like a shitty price action type of day. But we see price, let's see. We see price take out London session lows, break structure to the upside, rally into these Asian session highs, and then obviously, boom, we take out liquidity, price falls a little bit, fills this imbalance, pushes higher. This, if we look at the daily, bullish on the daily, bullish on the weekly. We've been saying this about GU. We said our next target area for GU was the top of this imbalance. That's been reached now. Like I've been saying that this shit, like, I don't even have to say this, but like, you know, I said that this would happen. Anyways, we broke structure to the upside. We were bullish on the 4 hour. We were bearish on the 1 hour. But for me, that probably would have just been looking for a 4 hour retrace, but this probably wouldn't have necessarily given us much because no fair value gap, no order block, no equilibrium, not necessarily a good spot to be trading in. And this is just one of those things where we probably would have avoided trading that day. So Gold and GU avoided it. Probably would have avoided trading. GJ could have caught something good. S&P, maybe you could have caught something good. But just going over what we saw today kind of goes to show that trading during CPI is not necessarily the smartest because you're getting a super low volatility move, and you're also just you're trading way later into the session than you need to be. So that's why we avoid it altogether. But tomorrow we'll hop on Zoom when PPI comes out. So I'm gonna wake up extra early, go to the gym at like 5 a.m. Grind time. And then we'll get on Zoom pretty early and we'll watch like as PPI affects the market. And I honestly think we'll make that a boot camp video too, like watching news come out together. And then like I'll make a video on like how you can trade news or how you can chart during news to increase your confidence in your own trading. I think that would be pretty cool. That would be pretty beneficial. So with that being said, that's our little Zoom markup today. I wanted to do back testing with you guys, but after going over what happened, like the CPI stuff today, I'd rather do it on like a more regular trading day. So like we take our trade for the day. So tomorrow it won't happen either, but like maybe on Friday we can make that the boot camp video where we like maybe I start the YouTube vid where I'm like explaining, oh, this is like daily bias, this is that, and then after that we show like what trade we took, and then I also get some of you guys on here to go over your guys' analysis on certain pairs and stuff, and I can kind of like critique and coach because I know a lot of you guys asked for that. So with that being said, that's a little back testing or just aimbot practice, as I would call it, with TJR on a CPI news day. That being said, I'll catch you boys tomorrow. Discord jits, I'll see you guys in there. And people on YouTube, I will see you guys. Actually, watch this video and then watch the vlog that's coming out today. It'll be really entertaining, hopefully. I have a gym vlog. Gym vlog's coming out today. So that'll be exciting. Hopefully I look jacked. If I don't, I got a cup more. Anyways, that being said, I'll catch you boys. Peace.